This Bitcoin setup delivered a 6.5 move using the AMD model with multiple confirmations lining up perfectly. Most traders got trapped during the manipulation phase right here, but this setup here gave clear confirmation before the move exploded upward. I started observing the price fluctuating within this accumulation phase till the price then breaks through the resistance zone in this manipulation phase where liquidity gets swept 3 times before confirmation. The price breaks through and gets redistributed upward. This is the potential profit that you could have made with entry position at 71,000 and a stop loss of 1.5 just below the liquidity sweep, and a take profit just above here at 6.5. Huge profit, right? So here was the entry, 71,393. Risk on this trade was approximately 1.5, given enough room to breathe without exceeding the 2%. The safe target was the closest resistance at around 5% right here, but the full move expanded over 6.5 for traders willing to hold. So the resistance I looked at to target our safest take profit of 5% is the one just right here at this level. And for the traders willing to hold longer, this was the other resistance that you could have looked at. The confirmation in this setup was not the first bounce and not even the second one actually, but the real confirmation came once the momentum fully shifted bullish. And now let me show you exactly why. First, the higher time frame trend was clearly bullish. Price was respecting the overall uptrend line. On the daily chart, price remained above the 50 EMA, and across the lower time frames, price was trading above both the 50 and 200 EMA. So overall, the market structure was still bullish. The AMD model in trading stands for accumulation, manipulation, and distribution. First comes accumulation. That's when price moves sideways while positions are quietly built. Then comes manipulation. This is where smart money creates fake outs, sweeps liquidity, and traps traders into the wrong direction. Finally comes distribution. That's when price aggressively moves toward the real trend direction. The goal is simple. Smart money creates liquidity first and then moves price where they actually want it to go. Now let's look at the accumulation phase in this setup. Price starts consolidating while still respecting the higher time frame bullish structure. During this phase, price remains above the daily 50 EMA, and on the lower time frames, price continues respecting both the 50 and 200 EMA. This tells us the overall market direction is still bullish. Liquidity is slowly building while traders become comfortable long in the market. This is exactly what smart money wants before the manipulation begins. Now the manipulation phase starts. Price crosses below the 50 EMA and moves toward the 200 EMA. This creates fear and makes traders think the trend is reversing. Then we get the first liquidity sweep and bounce. A lot of traders probably enter here, but price was not ready yet. Then we get to the second bounce, and again traders enter too early. And this is where many traders risk getting liquidated during the final sweep lower. This is why confirmation matters. Not every bounce is the real reversal. The real manipulation happens during the failed breakdown. Price breaks below support, liquidity gets swept, traders panic, but then price immediately reclaims support instead of continuing lower. That failed breakdown becomes one of the strongest confirmations in this entire setup. Now comes the distribution phase. This is where the momentum fully shifts bullish. Price reclaims the 50 EMA. Then we get strong bullish displacement candles pushing through resistance. Momentum starts expanding aggressively upward. This is where smart money begins distributing price toward higher liquidity. And this is where the real move finally begins. The confirmation came from multiple factors aligning together. First, we had the liquidity sweep below support, then the failed breakdown, then the reclaim of support. After that, price reclaimed the 50 EMA, then momentum expansion started accelerating upward. And finally, we get strong bullish displacement breaking through resistance. At the same time, RSI was coming from oversold territory with room to move higher. Then the MACD line crossed bullish just below the zero line, confirming momentum reversal. This whole combination created the high probability setup, not during fear, not during dump, but after confirmation. Invalidation was simple. If price failed to hold above reclaimed support and accepted back below sweep lows, the trade thesis was invalidated. So the stop loss stayed below support at approximately 1.5 risk. Enough room for volatility, but controlled enough to protect the capital. The safe target was previous resistance around 5%, but the full distribution phase expanded over 6.5. Now let's look at other examples to confirm our thesis. Here's the exact same pattern repeating again. Accumulation, manipulation, and then distribution higher. Same liquidity sweep, same failed breakdown, same support reclaim, same bullish displacement. And once again, momentum expands aggressively upwards. Now here is our second example, and we see that this setup works through all time frames. Currently we are looking at the 4-hour chart, and this example is important because it shows why patience matters. During the manipulation phase, price breaks above resistance and above the 50 EMA. Most traders would have thought the breakout already started here, but this was actually a fake out. The warning sign was RSI already sitting high near the overbought zone. That means price had limited room to continue upward immediately, so entering aggressively here would have been risky. To survive this setup properly, the stop loss needed enough room below previous support. A tighter stop likely gets wiped out. In this case, a 2.7 stop below support would have protected the trade. The real confirmation came later. RSI reset back into oversold territory with room to move higher. Then MACD crossed bullish once again. Price also bounced twice on the support zone and uptrend line before momentum fully returned. Then price reclaimed support, reclaimed the 50 EMA, and finally bullish displacement confirmed the breakout. That was the true confirmation, not the fake breakout. Now, after seeing multiple examples, you can start noticing the pattern repeating over and over again. This is why trading is less about predicting and more about waiting for confirmations to align. The traders they lose usually enter during manipulation. The traders who win wait for confirmation before the distribution phase begins. So here are the 3 main rules from this entire setup. Wait for the liquidity sweep and failed breakdown first. Enter only after support reclaim, EMA reclaim, and bullish displacement confirmation. Use RSI and MACD to confirm momentum is shifting back bullish. That's the difference between reacting emotionally and trading with structure.